What is up, guys? Hope everybody's having a great morning. It is Wednesday, November 28th. I'm going to be starting off with the recap on the SPY. So, right now, what I have down marked here for you guys is the daily support and resistance markers. These are key areas to trade intraday. They are, um, very important areas that we look at intraday. And if you watch my preview for the week on Sunday, you'll notice that I had a downside target of around the 259 area from this candle here. That was if this support broke. We spoke about it, and I noted that it did hold. This support here at the 263 level, it held somewhat like a double bottom, and we saw a gap up Monday morning. So that's very key. I said if we were to gap down below this 263 area, we could look for a short and a retracement down here, but we didn't gap down, we gapped up, and because of that, we took out our first upside target, which was from this resistance level. You could mark it from this previous chart history here. You got the congestion up here. This is the 267 level. This lower wick, and then even into here too, previous few days, you see how well that these days react to that line. So that was our first upside target. We got it. We surpassed it, and we closed above 268. And now I'm going to go into the 30-minute chart, and this is where I find my intraday trading levels. As you can see here, before we get into that, our upside target will be the 270.40 area. You got all these candles reacting very heavily around that area. It's going to be a noted detailed range into today's trading session and going forward into the week. You go one above that, you hit 271.75. These are going to be key levels for the bulls and the bears. As you can see, our MACD has posted a higher low. We're starting to curl down here. Our moving averages are starting to curl. We're still on the downside, so there's going to be a bit of upside resistance. These EMAs are going to be tough to surpass or flip around. But as of now, the bulls are feasting a little bit. We're gapping up again today into that 270 range. Clean uptrend. Like I said in the chat this morning, usually when we make a power hour move to the upside, it's called a price probe. Usually the professionals look at it on the 30-minute chart. If you make a new high in the last 30 minutes, you're more than likely to gap up the next morning. Vice versa if you're making a new low. It also depends on your support resistance area, because Monday's session is a great example of making new highs but being stuffed by resistance. And as you can see, that's why we pushed lower. This what line is this? Is the 267.40 range. That was our detailed resistance on the daily, and you could see that this really gave the bulls some trouble into the end of the day, almost like a double top pattern, and then we retraced post market. So getting into the 30-minute chart, these were my trades yesterday. I'm gonna pull this up for you guys here. The 266.80 resistance area was very key yesterday. This offered a great trade in the morning. This is how I find my 30-minute support resistance. You can see here, this was a low, highs of this day, highs of this day. You could just mark it down like that. I usually like to go where the candles close. You can see here, they surpassed it a little bit but failed to close. That's showing me that we have a lot of resistance in that area. So then what I'm going to do here, now that I know that is a key range, I'm going to pull up the 5-minute chart yesterday, and this is the opening play, the opening pullback. We got a great pullback. We were gapping down in the morning, so I was expecting a little bit of a strength coming into the day, and I was telling all of you guys I wanted to look for a short near the highs of yesterday's range, and this was perfect. Great stuff. The candle failed to surpass our resistance level. The MACD was overextended. It was posting lower highs, and look at this rejection from about 266.85 down to lows of 265, 66. That's great. That's a great range to be trading, especially within a 10-minute time frame. I was trading this on the 1 minute, or looking to trade this on the 1 minute. It reacted a lot better. We got better confirmation. The moving averages and EMAs and indicators all react better when it's moving fast. That's why I capture the overall trend on the 5-minute chart. See, hey, this is really getting stuffed. I'll zoom in on the 1 minute, and that's when I'll decide to enter or exit my trades. Great rejection here, great pullback, and then you would sell out once your MACD started to post a new trend. After you would see that this posted a higher low. That's an indicator for me that maybe it's time to exit this trade and the trend is reversing. So that was trade number one. Quick, early in the morning. And then later in the day, we had a stuff on the 267.75 mark. And we'll see where that's located at. That was the high of the days yesterday, or the day before that. This is a tough range. This was the top right here. It was a bad tick on the session before that. We'll go to the 15-minute chart from the day before. If you were paying attention on this session, it was a bad tick. There wasn't much follow through up in this range. I was looking for that to be another double top sort of situation in yesterday's session as well. And then you made that run up. This is right here. This is another great pullback level. Perfect reaction to that line at 267.75. The Bulls made a fantastic run up, rallying incredibly after that initial pullback. And as you can see here, the MACD was overextended. Perfect rejection at our line and fantastic pullback into the EMA. So from 267.75 down into lows of the 266.50 area. You also could have double topped it up here again. I was short here as well. This is a quick trade. Definitely a little hectic, but pull back again. We'll pull this up on the 1-minute chart for you guys. Look at this rejection. It's beautiful. Clear, defined, right to the game plan. Even here as well, you can see it failed to break out. Red candle, overextended MACD. Another pullback back into support. 267.50 or the 40 range. Great action yesterday. 2 pullbacks on a day where the Bulls were in control. I'm not usually short biased, but it just ended up being like that yesterday. And hey, you can't complain. So that's work on the SPY. I'm going to head over to our other setups. This is Pfizer. I'm going to pull up the daily. We've been trading this on the daily or watching it on the daily. We are in a triangle. As you can see, we had a big day yesterday. And we're still waiting for more confirmation on this. Initially, this was going to be the same deal as the SPY. If we were to gap down and break that lower support, we could have looked for a retrace of these lower levels. But if we do break out on this upside and we get more confirmation today with some heavy volume, we could look to go long on this as it's starting to break out of its triangle. We have room to this upside level, up towards these candles. So there's some room on Pfizer. Great daily chart setup. Our moving averages are flat. Our MACD's flat. So this really has a way to go on either direction. That's what we're going to be looking for. But we definitely need confirmation. We definitely need to be patient and see what the market does. If the market's going to reject the upper levels, or that's where we'll see. And that's how I use the SPY, is to correlate what I'm going to be doing. Another setup we had was Apple. And I'm going to show you guys how to use the Fibonacci retracement level on Thinkorswim. It's very simple. Does everything for you. You're going to go to the top of the breakout at 233.47, and you're going to find the next low from the previous here we go. And it'll match it up with these, I like to call them magical numbers, and they do work magic. But you'll see down here, we bounced on Tuesday's session. We tested the low, and that could have been a great area to buy in, as our MACD was way oversold. You could tell here we even posted higher lows. for a bounce. I was looking at this for a bounce or a short. Either way, I go either way. Whatever the market tells me to do, that's what I'll do. Um, right here, we got that bounce off that level. We're bouncing up again this morning with a gap up to the 176 range. So roughly 6 points on this opportunity in 2 days. Um, it was also this gap resistance here. If you were to delete the Fibonacci retracement and just went simply off the chart pattern, that gap held, it didn't necessarily get down all the way to it, but it was down close enough where you could have confirmed it as an entry. So that was Apple. Go over to Netflix, same situation with the SPY. This was another one we were looking at to go short if we gapped below support. You have to wait for confirmation on whichever way your support's going. In this case, the support held. I wasn't necessarily trading this to the long side. I had a short listed for it yesterday at the 269 level. We'll go into that after we look at this daily chart. But clean support from these levels here. It matches over on this side as well. A couple months down the road, and it still holds. So that's why we had that nice run up on Netflix. I'm still pretty, looking for this to break down. It's one of those stocks. So we'll go into the 30-minute chart and where I found that 269 resistance level. Yeah, here we go. Lows were here. It was heavily affected in these 3 days, the 269 range. You could tell how these candles reacted to it. So carries over into today's or yesterday's session, I should say. And we, somewhat of a double top pattern. MACD was overextended, touched the 269 area, pulled back almost 4 points. Incredible intraday move. A quick trade. Predictable. Simply just going right off your indicators. You could tell here MACD was overextended. You wait for candle confirmation. Candle closed below it. Red candle, and then took over from there. So as of today, I'm more or less looking at what the SPY is going to be doing. Is the SPY going to be taking out these higher levels? What kind of reaction are we going to get? Is the MACD going to end up going green? I'm going to be patient. I don't really see many plays for me today. I'm more or less looking and observing, analyzing what the market's going to be going to do next, and that's how I'll decide and make my plays. Patience is key in the stock market. That's just how it is. There will be days where you might have required entry or exit on multiple stocks. There will be times where you just have to sit there on your hands and wait it out. So that's what we got for today. I hope everybody has a great week. I hope everybody has had a great trading week so far. We've had some solid opportunities. With me, I always have my eyes looking out. So yeah, I'll get back to you guys in chat. Have a great morning.